made it and we're about to whip it out, because it's Whip It Out Wednesday over here at the Solomon Project, where it's not how much you make, it's how much you keep that counts. I'm your host, Richard Burns, and I'm going to break it down. We're going to take a look at both accounts, one from AJ, one from CJ, and we're going to see how we're doing with them. So AJ, for all those who don't know, if this is your first time here, AJ and CJ came to me and asked me what I need to do, or what they need to do, to move ahead financially. I suggested that they start looking into the stock market, because the stock market is a place where the wealthy have acquired their wealth. For example, Warren Buffett. Or it's a place where they maintain their wealth, or it's a place where they increase their wealth, or all three things. Yeah, all three things. Something to keep in mind, something that I told both AJ and CJ, is that the way we have access to the stock market, it is the best in the world. You cannot access the stock market, maybe in the UK, but I'm not sure. However, you can access the stock market in ways here in the United States that you cannot do in the other parts of the world. So the best thing to do is, when that tool is available, use it. Acquire that wealth, or acquire something better than what you have now. Why not? We're going to go over both these accounts. Let's take a quick look. And we're going to start with AJ. So what's AJ's deal? AJ takes $35 a week. It gets transferred automatically. He doesn't have to sit there and think about whether he's going to pull the trigger or not. No, it's automatic. $35 a week. It goes from his bank account to his investment account. Now, both CJ and AJ invest long term. In other words, minimum 5 years or more. They'll purchase a stock and hold on to it minimum 5 years or more. Now, there are tax implications. It's important that you know there are tax implications when you hold on to a stock for less than a year, sell it at a profit. You're going to be taxed at a different rate, a higher rate, than if you purchase the stock and sell it after a year for a profit. Before a year, you're going to pay more taxes. After a year, you're going to pay less taxes. After a year, you pay long-term capital gains. Before a year, it's short-term capital gains, which is whatever you pay as an employee of a company, basically. So there's a benefit to holding on to it, or at least that's one benefit. Another benefit is you're not following everything around. You're not worried about the changes in the prices. You're investing in a solid company with a good reputation, and you're holding on to that stock. The stock may go up, it may go down, but you don't worry about it. Especially with the stocks that CJ and AJ are both picking, because they are income producing stocks. They pay a dividend. Whereas something like Tesla, something like Nvidia, well, Nvidia I think does pay a dividend. Tesla does not. Tesla is a growth stock. Growth stocks don't pay dividends. So the only way you make money is if you buy it when it's low, sell it when it's high. And again, don't forget, if you hold on to it for less than a year, you're paying a higher rate in taxes for the profit that you make than you do if you sell it after a year. So let's go. Let's take a look at AJ's portfolio. So you'll notice, if this is your first time here, we don't show what stocks he's got. We don't show what stocks AJ has, and we don't show what stocks CJ has. We don't recommend stocks here. We don't do none of that. But we show you on a weekly basis how their portfolios are performing, and whether it's up, whether it's down, it really doesn't matter, and I'm going to show you why. So here's AJ's portfolio. If you look at the bottom right, you can see that for today he's down 1.5%. So he's down $26 today. Remember, it's $35 a week. He's at 1,851. AJ's trying to get up to 2,000 so he can get a certain door open. Now, you don't see the name of the stock, but if you start from the bottom and move across to the right, you're going to see how much he's accumulated in stocks for that stock. He's got 78 shares worth $924. Right above it, he's got 26 shares worth $500. The one above that has one share worth $12. The one above that has 73 shares worth $354. The one above has one for $27. The one above that has two shares for $32. Why are they all different? Why aren't they all an equal number of shares? Because AJ's doing what was called dollar cost averaging, but he's not buying in any particular order. What he is focused on is which of the stocks is performing the worst, and he's buying more of those shares because they happen to be a cheaper price at the time. Let's swing over to the gains and loss tab where you can see what I'm talking about. Now, year to date, on top, you can see that he's incurring an unrealized loss of 14.68%. So he's got an unrealized loss of $318 since the start of the year. Unrealized. What's the difference between realized and unrealized? Unrealized is when you're still holding the stock. Realized is after you sell it. So had he sold, let's say this portfolio was an ETF, if he sold this entire portfolio, instead of having an unrealized loss of 318, he would now make it a realized loss of 318. But check it out. So see the one on the bottom, that's the one that's underperforming the most. So the current price is $6.45 lower than the average price that AJ's been paying of $18.30. So he's going to continue attacking that until he at least breaks even, until he at least has zero loss as an average price that he's paying for. So the money comes in on a Friday, he purchases shares on that very Friday, and it'll more than likely be that particular stock. Now, why doesn't it matter? Why isn't it a big deal that he's down 14%? Because the purpose of this portfolio is to generate income. That's the most important thing about this portfolio. All the shares, you got 6 different companies, and all the shares that he purchased is for the sole purpose of receiving dividend payouts. So let's go over to the income so that we can see what I'm talking about. Okay, so you're going to notice on the bottom, there's an arrow pointing to the current amount that he's supposed to be making by the end of the year, by December 31st, 2024. So far, it's $125.39. That $129 next to it is what was projected had the portfolio kept increasing the amount of income by $1 a day. It started out with $77. So at $1 a day, or $1 a week, $1 a week, he would end the year making $129 in income generated by the stocks. But as you can see here, we're already at $125 and we're at the end of July. So what will it be by the end of this year? By December 31st? Stick around and we'll find out. So that's the income for AJ. That's why he's not concerned with the portfolio going down in value or even going up in value. So he's detached emotionally, which is something I recommended to him. Now let's go over to CJ. CJ. So CJ, something important I want you to note. Now CJ is depositing $100 a week. So he caught up and passed AJ already. And right now, CJ has a net liquid value of $1,994.73. It was higher. It was above $2,000 earlier today. However, because it was above $2,000, something happened to his portfolio that AJ is waiting to happen to his once he reaches 2,000, and that is that CJ, instead of having access to his $100 deposit, he now has access, and that's what and the STK BP on the left side of that arrow stands for stock buying power. Stock buying power. So now the margin activated. What is margin? Margin is a loan. You could borrow money, you could borrow shares. In this case, CJ has no plans of short selling anything, so he'll use this capital to purchase more shares. Now, gotta be careful when you borrow for buying shares. You have to be real careful. Sometimes you could purchase some shares with the margin, with the loan, cash loan that will be provided to you. But all too often, people don't understand that once you do that, you have to monitor your portfolio very carefully, because all too often, people's portfolios get destroyed because of margin. When there's a margin call, the institution that loaned you the money, they're going to want their money back right away, and you might be in the negative when that happens. So you're going to have to be extremely careful. Now below the STK BP is the OPT BP. So the STK is stock and the OPT is options. So you got stock buying power, and then you got options buying power. So the options buying power is $1,383. The stock buying power is $2,766. This is money available to you in order to perform an options trade or to buy stock. So you can use up the entire amount that you see there for whatever purpose you want, whether it's to buy stock or to perform an options trade. So I hope everything there was clear and you understand what's going on with AJ and CJ. This is something that we're trying to encourage the hood to get involved in, because why stay on the sidelines when you have such a powerful tool available to you? And if you're confused and you have any questions, listen, I don't sell courses, okay? But if you hit me up, and you'll see in the comments, you'll see my email address, you can ask me questions there. I don't teach here on YouTube because I think that's a form of disrespect for people who have paid a lot of money to learn how to trade, learn how to invest, or for people who are teaching that are making money teaching people how to learn how to invest or learn how to trade. I'm not disrespecting either party, so that's why I just keep it simple. I don't show off what AJ and CJ have for stocks. Those are stocks that I showed them from my own portfolio, and they picked and they chose whatever they wanted to put in their portfolio and how they want to go about doing it. And I just recommended how they can go about building it. CJ is taking one approach, AJ is taking a similar approach, but still different. So with that, I'm gonna let y'all go. Let y'all go and stay fresh, keep it moist, and keep it profitable. Now, if I can find out what the hell Kitty's doing, because we need to leave And Kitty's always out in the hood doing something, man. I don't know. All right, hold on a second. Let me see if I can locate Kitty. I got a locator on him. On Kitty. So if Kitty tries to get... Oh, man. Ooh. Kitty's up to no good. I found him. Kitty! Kitty, get over here!
Arabam Dacia, seviyorum çift kalem aça. Göremedi kimseden fayda. İşler